taking a look at today is Alchemix. And just quick little disclosure, CMS is an investor. This is just really for demonstration, not financial advice, all that stuff. Um, so essentially, Alchemix is a synthetic future yield back asset platform. And so that's kind of like a lot of words, but it allows you to deposit assets and mint debt against it. That's essentially an advance on the yield you would get from the deposits. So instead of just putting it into a normal sort of debt protocol like Compound or Aave and getting your yield slowly, it kind of allows you to withdraw that yield ahead of time backed by your collateral. And the yield on that collateral pays back that debt over time. And since the debt is always being paid down, and with the current design, you don't have to worry about liquidation, which is a pretty handy concept with like sort of any kind of collateralized debt. So one of the major components here is called vaults. It's basically the center of the protocol. That's where you deposit the assets and you mint the debt against it. Right now there's DAI and ETH, which allows you to mint AL USD or AL ETH, which those are basically the synthetic assets that you mint as debt. You see the borrow limits are a little bit lower for ETH there, just because of obviously that's not a stable asset like DAI. The collateral then is deposited into urine vaults to get yield. And again, like I said, the yield is automatically paid down over time. So you can either owe less of that debt back whenever you want to close everything down, or you can borrow more as you go along if you want to keep that open. If you want to close everything down and just keep it super simple, you can liquidate your collateral. There's a screen basically right on the platform that you can use the collateral that you deposited, liquidate that, repay the debt, and anything over that debt basically is returned back to you. And so what this basically gives you is a flexible line of credit on your yield, and you can take that really however you want and get yield across the ecosystem however you see fit, though there are a couple of ways directly on the platform that are pretty lucrative. The second major piece is the transmuter, which basically is how the synthetic assets stay pegged. And you can always swap ALUSD for DAI or ALETH for ETH 1-to-1. So this essentially makes it so that, you know, if there were market prices that deviate over on, say, like Curve or wherever else some of these are trading, if they fall below a peg, there's arbitrage opportunity for anyone to come in and close that down. So that sort of keeps the peg right on. And then this transmuter also deploys its capital into urine vaults, and that boosts the yield for the depositors in the vaults. So a lot of times, like, you'll see the yield is quite a bit higher on the vaults than directly going into the urine vaults themselves. From there, you can do a lot of things with the debt. Like I said, you can really do anything, but if you want to keep it on platform, there are some pretty lucrative farms directly on there. Curve pools, saddle pools, etc. There's some LP pools on Sushi, on MStable. They're just that have rewards of their own. Or like I said, you could trade the synthetic assets. There's the curve pools and saddle pools that allow you to go from DAI to a bunch of other stable coins, or from ALETH to wrapped ETH, and then you can take that and farm wherever you want. And just I just want to quickly note on APY, just so people kind of get an idea on these things. There's a lot of assumptions that are made when you see a big APY number on a screen. The price of the reward token, what the emission is, the total value in the pool, how they're compounding. And so that can change a lot depending on the price of the token, the total value in there. The emission rates often scale down over time as the product kind of gains traction, that it'll naturally lower. And APR is the base rate before compounding. APY takes into account compounding. So you kind of have to make sure that that math is being done right as well. And everything's different there. Yeah, and just some risk disclosures. Obviously, you guys probably understand all this, but just to throw it in, I think it probably near the end there. So
Yeah,
let me
cool.
know.
Thank you.
Yeah,
Yeah,
no worries.
I myself, I have some uh, ALUSD, but I don't know what to do with it. I just put it in and took it out, and then I just
Yeah, I mean, you can take it
In a
anywhere.
way,
You can,
you can go leverage. You can set it again to
yeah,
die and
yeah,
do it
you could,
again.
yeah, absolutely.
Yeah,
You could do the sort of leverage loop if you want to do that. There's also some pretty good rates on just depositing that into Curve or some of the other pools you can get right on the farming page
yeah,
on the platform. So, um, and then like I
yeah.
said,
I think
it'll pay
it's a
back your debt
awesome
there.
it's an awesome product in a way because it's just just turned around somehow.
Yeah, I think it's also it obviously on the back end it's not so simple, but like for the end user, it's honestly pretty simple to use. And for someone to kind of try out farming, it's not like super scary to get into. But you can make it more complex if you want to.
But you token if you don't touch it, then you token eh, you see so it gets paid back, and then at
Right.
some time you can like take out your DAI or ETH again.
Yeah,
That's basically it is.
exactly.
Yeah, yeah. But
Yeah.
nobody knows how long it takes. It's just
Well, I mean, it's obviously it's going to vary depending on the rates in the market,
yeah.
and like right now, stablecoin rates are fairly high, but
Yes,
that
yes.
fluctuates. I mean, in general, in crypto, like stablecoin rates stay pretty elevated, just based on demand for leverage and a whole host of
Yeah,
things.
exactly.
So like, it's a pretty good option for some decent yield on that stuff.
How long is the token? Now you get some Alchemix token too. Is it the government's token or
Yeah,
what's the
exactly. The rewards are in the Alchemix tokens, or at least a lot of the pools. And so that's basically the governance token of the platform, that you can use to vote and that kind of thing. And there's pools for the Alchemix rewards that you get as well that are pretty high interest. So if you are sort of want to stay in that ecosystem and you like the token, you can get pretty good yield on that as well.
okay? Someone else?
Is there a reason why they only choose Y earn when I think like Vesper or other yield aggregator has
Mhm.
better yields?
Yeah, I think I mean, obviously I can't speak for the team exactly, but I think overall it's obviously one of the big blue chips that people feel safer putting capital into. So, it's just probably more a function of that. I'm sure over time, like maybe they would expand as things, get more like field tested. But for now, obviously, Urine is a pretty tested product, and people feel comfortable like deploying like a fairly large amount of funds there. So, you know what I mean? You may not want to sort of place your bets for an early protocol on something that is less tested. But again, it depends on risk profile. It depends on anything. Obviously, I think like token holders could vote to add some quote unquote riskier pools if they wanted to juice yields even more. But that's sort
Uh,
of where it's at right now.
what are their current kind of token utility for Alcs?
I think mostly it's governance right now. Again, like any governance token, I think that can take any shape in the future depending on how the token holders in the DAO decide to take it. So
Understood. Are there any other? I guess there isn't any competitor similar to. I think it's one of the blue chip that no one actually for, right?
yeah, I think trying to think. I thought I heard of something that did like fork it a little bit, but I can't remember the name right now. I mean, it's honestly it's pretty similar to a lot of other like collateralized debt platforms, but then you have sort of the self-paying debt aspect, and it definitely has some unique elements to it that I think make it pretty interesting.
Yeah, for sure. I was think that it would be interesting if they added, other asset when I think they have a little hiccup when they added ETH as collateral, but I think after that everything went well. It would be interesting if they add, like wrap Bitcoin and some other assets.
Yeah, I'm sure. Like, I'm sure all that stuff is definitely in the roadmap. They want to add more. It just, they want to make sure they do it well and make sure stuff is integrated properly and that like it's going to be popular enough. But I wouldn't be surprised at all to see like something like wrap Bitcoin in there at some point soon.
Yeah.
Well, I can't say soon. I'm not the one working on it, but you never know.
Yeah.
Awesome. Thanks.
No problem. Thanks for the questions.
Thank you. So
Awesome.
yeah, myself, I'm next. Okay.
All right. Thanks, guys.
I have to switch my my mindset now. Just a moment.